Good morning, guys. Welcome to this Friday, September 19th. Thank God it's Friday, right? Maybe a long week. Busy week too. So we've been holding on. We gapped up. We rolled to the December expiration. This is the first week on the December expiration on the indices. And so far we are holding the gap. We had one little scare there on the CPI number. And at this point, we are kind of back to, what that wasn't CPI number. What was that number? Ah, forget. The big reaction. The Fed made a Fed number. Just a CPI. I think it's CPI. Fed number. Yeah, Fed number came out. That's when we got that little scare, and then so we recovered pretty good, and we've been holding on to the gains ever since. So. At this point, we are solidly in price discovery territory. We are holding on to the gains. It's kind of grinding higher. It's not shooting straight up, but it's never does. The only thing you have to keep in mind is like once the run is done, you're gonna get one of those little elevator down days. Just be prepared for that day. When it happens, it usually takes everyone by surprise because it comes out of nowhere, and then suddenly you have this huge elevator down day when everything kind of shakes out. As far as I can tell, those are going to get bought, and they're not going to be. I'm not seeing anything structurally out there right now, which would make me think that we have a downturn coming. Seasonal weakness for August, September has been muted at best. So this is one of these years where we have enough headwind or enough tailwinds to carry us through it. But it's at this point, definitely looks like a pretty strong overnight. I've been holding on to the gains from yesterday, and we'll see. Right now, it looks like they're trying to take it higher. We'll see. News this morning, nothing. The quadruple witching it was going on. We have options expiration. So today you can expect a lot of whipsawing back and forth. I usually try to take it easy on the quadruple witching day. You never know when you're going to get. Uh, what I think it's primarily marred with not following through any moves. So you get moves starting but no follow through. It just moves it to price levels and stops. So that's kind of the dynamic. I've observed. We'll see how today shakes out, but I would probably expect more of the same. So I'm going to be expecting more of a range bound day. I'm going to keep our bias to the upside, and I'm going to be looking for buying opportunities. But being very mindful that you're in an options expirations environment today. And we may see some whipsawing back and forth. So I'm not going to be looking for big moves on one side or the other, primarily range band kind of stuff. But I would lean towards the long side, given the capital flow, given the F1, given the F2, and that we are still, I mean, nothing really to drive us down, if you wish. There's not really, they can kind of, bad news can come out of nowhere, but right now we have nothing scheduled, which can be drag us down, and we have um, pretty good tailwinds behind us. So starting off, range bound buys to the upside, looking to buy against that 6680s, 6670s, 6660s. So three levels down. That's how I'm going to start off today. And below 60s, I'm taking off the long bias, going back range bound. Still looking to buy against the 50s and 40s. But below the 40s, that's when you get down into that gap closure area again. Now, we already almost closed this gap, so I'm not going to be expecting a lot on or looking for that kind of gap closure right now on the ES. Needless to say, though, the 40s, if they comes out, I think we're going to be seeing some weakness, maybe a run down here to that 65.90s. But it's going to be interesting to see if the day is going to be able to hold on to the gains, or if we're going to get some weakness going into this Friday. But as I said, starting off from the long side of the market, looking to buy a weakness against the 6680s, 70s, and 60s for rotations back up. And on the way up, looking for shorts against the 6705s, 6715s for rotations down. A little bit less aggressive on those shorts since we are leaning towards the long side of the market. Yeah. But if you're going to be more of a range-bound day in this quadruple witching environment, then I'm going to be probably we'll see how it looks by after the London close. But I would look for short setups, just to look for a better setup, like a little bit less aggressive on those shorts. So that's how we get started. Pretty straightforward. Looking to buy against the 80s, 70s, 60s on early weakness. Not going to be super aggressive on the short side by any means if they start running it lower. If they take out the 60s there, I could start looking for short moves, continuation moves to the downside if it looks like that early weakness is turning into something more than just temporary weakness. So that's kind of how I'm going to start this, and then we'll adjust as the day goes on. Looking at the Nasdaq and the bonds, so bond market just pretty much staying. They backed off a little bit yesterday, haven't done much. So I'm not going to be more than range bound on the bond market. They backed off this upper edge. So they were up here flirting with the 1816s. Now they're down to the 1616s. So yields came up a little bit, prices came down. But as long as they hold this level, the 1616. It's 1616 down to the 116, so it's like a 15 tick range, I would say. If they hold that range, I would be more inclined to stay range bound. But if and potentially look for rotation back up, if they take out this area, because they're right in this area now building value, so they had to kind of get up above that 16 and hold. But if they start taking out that 116.04, I would be more inclined to think a rotation down to the 114s, back down here again. So I would be getting yields right back up to where they were before, and this whole probe to the upside goes away at that point. Yeah, this whole move out of the middle started beginning of September. So it popped up in beginning of September, been holding here, and then we'll see if they can hold it. So far, they're still holding it. I would still looking to buy. I would still look to buy against that 1610, maybe down to the 1604s for rotations up. But below 1604s, 116s, and I'm going to be looking for a move to the downside. So that's kind of the way I'm looking at it. And that would be right down to this lower attractor to 114. So that would means that the yields coming up a little bit more and prices on the bonds come down. So that's the bond. If they start trading up above the 1624, the session highs, I would be looking for more of a retracement trade confirmation above the 117th. And they can get up above those two. I think they're right back on in its upper range again. So let's see how the bond market develops. But right now, I'm looking for early weakness, looking to buy against these two support areas. And if they hold, we may have a range-bound day or maybe even a retracement day to the upside. But it's if they take him out, that's when I think they have a good shot at running it down to 114. Could be a big move to the downside on the bond market at that point. Nasdaq is in all new high territory, price discovery territory. Looks like a pretty good move. They gapped up a little bit of a pullback here in the Fed announcement, but since then they took off to the upside. And yesterday we had a good extension day, mostly in the overnight, but the day session held on pretty good. Did not take out the support at 660, 650, 660 here. They held on to that pretty good. And I'm thinking the Nasdaq is the one driving us higher. So I saw the last few. There's been quantum stocks, there's been AI stocks, semi stocks has been on fire, and it's been pretty good. So it's definitely getting bought, and the that trade is very much alive. And I keep saying it. That's trade. Anyone that says it's a bubble, it's going to be shortchanging everything. So that whole thing is going to be growing. It's going to be the next big industrial trend, AI. And anything goes with it is going to be dragged right back up with it. So, so looking back 10 years from now, when I look back, I can say, oh, yeah, I told you that way back in the day. I told you that. Anyway, it's kind of where the internet was in the 90s, late 90s. And you look at where we are right now when it comes to how you use the internet. That's kind of where we are, and the AI has potential to go even further. So there is pretty good upside potential on that. Anyway, so Nasdaq, looking to buy weakness on the Nasdaq. So I minimize that thing. Yeah. So looking to buy against that 660s, the 600s down to the 550s for rotations up. Below that volume edge at the 550s, I'm taking off the long bias on Nasdaq and going back range bound. But initially looking to buy against that 650s, 600s, yeah, 550s for rotations up. And on the short side, the 740s and the 820s are potential short setups, but or areas where you can look for a short setup, but I'm not going to be very aggressive on it. We are still in the move out of the middle to the upside, and you do want to you do want to be on the long side of that if you can. And sometimes you do get short opportunities. I mean, you saw I tried to take a couple of shorts yesterday, but those were those were more scalping shorts, given that they kind of run out of gas on the way up, and you have a breather and you look for a little pullback. The better trade is trying to get on the long trade, the move to the upside. That's where the one's going to go a little bit further. The only thing there is you don't want to keep chasing those moves. So if you're always late to that move, you have to reassess what you're doing. You want to get in on the pullback to the downside, the early weakness part. That's when it feels like it's going to head lower, but that's kind of the time you need to buy it, because that's if the bigger picture is moving the market higher. So it's the go with type of trading. When you always buy the breakouts, it always gives you shitty trade locations. Sometimes they work great when they have enough momentum in the market, but days like when you have marginal days, that's when you get always caught on the wrong side of the market, and it just sucks every time. Trust me, I do it plenty of times myself, get myself caught in a move like that. And then most of the time is when you don't pay attention. You just kind of react to something you're seeing on the screen, and you take your shot, and it's just immediately regret it, you know. Anyway, you all live and learn. That's a constant in trading. You always live and learn. The oil and gold markets. Gold is right back to value. We're sitting here, flopping in the wind, twisting in the wind. And that you can see, looks like we're finding value here right now. The probe to the upside the last few days failed. They retraced back here, building value at 3680 to 3700. And we have a pretty good range right now. So they start trading above that 3695 to 3700s. To stay on the long side. They start trading below that 3660s. Look for potential short retracement trades. So good volume area. We're in the middle of it. So you have it pretty obvious right now. You're looking to buy down to that 3670s, 3660s. If they take out that lower edge at 60s, look for potential continuation to the downside. And on the way up, looking for short against the 3690s and the 3705s. And if they take out that 3705, I think we are staying on the long side of the market. So that's kind of where we are. So range bound gold to get started, and the oil, we're trading the November expiration right now, and you can see we are still at value, not going anywhere, not really going anywhere. It's just going sideways there right now. So the rollover didn't do much for the dynamics on oil. We are just stuck here at the 63, 64 level, and I'm just waiting for the next leg lower. I say, and there's nothing in the policy or anything like that that's going to take oil higher unless you have like a geopolitical conflict of some sort. And even that is going to get less interesting, or not less interesting, but less impactful, I should say. And as you get the US oil production back on track, the prices are going to come down, and they're going to come down probably in the 40, 50s in that range. So it's at that point you get a big relief in our wallets and everything else. So overall, oil production and all the policies right now is to drive energy prices down, and that's going to be showing up in oil prices eventually. But so I'm thinking short side of the market in the bigger picture. I'm not there yet in terms of the making a call on it, because capital flow is range bound. As you see, capital flow is range bound. The exchange member chart is range bound. There's no reason to trade it any other way right now until you start seeing that move to the downside. So initially looking to buy against support 62.50s, 62.20s. Looking to sell strength 63.30s, 63.70s up to that 64 level, and that's kind of the range we are trading in. All right, so that's oil and gold. Back to the ES. And okay, we're looking at a little bit of strength going into the late morning here. Let's see how that goes when we get into the a little bit further down the road here. So ES Nasdaq start off from the long side of the market. Let's see how far they can take it, and what kind of day we're going to end up getting here. So I'm going to wrap it up here. So good trading, guys, and I'll see you back at 11:30 for the next update. So good trading.